Good morning, everyone. First, I'd like to thank Standard Bank to present this opportunity to speak about some of the important things going on in Angola. I know the topic is broad, but my intervention is going to focus more on that, what we are doing, what are the outcomes of some of the policies that we have implemented in the past years, what are our main goals for the next coming years, just to show this perspective to everyone, as we believe that there's many ways in which we can collaborate with some of you. Um, so we brought this topic at a time where we have just approved our new uh, our debt medium-term debt strategy for 2026-2028, and also the annual borrowing plan for this year. So we thought that it was interesting to bring this theme to this event, as it's something that we always get interest from all the stakeholders, be it private organizations, multilateral organizations. So we thought it was best to do this. Just going to mention that some of the documents that we'll be touching here, they are available, and we'll also make sure that you can access this presentation. So because of I'm mindful of time, I'll just give a brief of what is going on in Angola in terms of debt management. Um, our previous strategy, the 2024-2026, had key priorities. I think some of them that we can stress here is about the improving the cost of debt. In the previous strategy, something that we had been pushing is just to be more rigorous whenever we negotiate debt, be it for several purposes. We can talk about debt for treasury support, debt for financing projects, and this allowed us, to increase the maturities on some of the facilities that we have been contracting from several type of borrowers. Maybe the other aspect that I would like to stress here is the fact that we gave up on collateralized debt with commodities. As you may know, in the past, we had these facilities which kind of restrain a lot of liquidity. So in the previous strategy, one of the things that we managed to do is to drop this, as now the collateralized debt that we have is quite minimal. We have with China, we used to have with Brazil and Israel, but one of the points that we wanted to stress here is that we have managed to move away from these. And I'm touching on this because it's a point that is always raised by investors. Also, here you can see how our debt portfolio evolved. As you may see, in 2020, the portion of the debt that we had with China was way bigger, and this included some of the collateralized debt that I was talking about. Now we have managed to diversify more the sources of funding, and where we stress the United States, we are talking about um, financing from multilateral organizations. We've also increased the portion of the financing that we get from the markets, and these are some of the key points that we would like to stress. But in managing that, one of the important aspects is obviously the volume, the stock. And we have been on a downtrend um, volume of debt, as you can see on that graph there, where we went from um, 69 uh, debt to the GDP ratio of 69% in 2021. Now we are about 50. So we right now are committed to maintaining it at these levels. Um, and so that we can ensure that the debt is sustainable, although there's still many room for improvement, especially in the cost of debt. This is just a continuation of the other slide with more details. Obviously, you'll be able then to access the presentation, and I'll be around over these next 2 days so we can talk about and exchange some ideas about this. Here we have a few objectives that we had in our previous 2024-2026 strategy. We've managed to to achieve some of the goals where you see that on the last column within the goal. There's still aspects that we want to improve, and one of them is the percentage of debt maturing in 1 year. Obviously, because of the current situations of the markets, domestic markets as well international ones, often we are forced to find these short-term solutions to cover some of the liquidity gaps. But one of the key objectives that we have for the next coming years is to, improve and reduce the amount of short-term debt, because this causes a lot of stress for the treasury. And the main goal for us is just to find solutions that will allow us to have more fiscal space to do other things, uh, especially projects related to social needs. Here then we have some of the pillars that we have for the current debt strategy, the one that was approved recently. And one of the main things that we want to stress here is our need, one, to find hedging solutions, especially in an environment where there's a lot of uncertainty. This be it hedging solutions to manage better the interest rate risk, exchange rate risk, as well as the fluctuations in the oil price. So this is something that we want to focus for the next coming years. I would be able to talk more, but again, you will be able to access this presentation later on. These are just some of the evolution of the risk indicators that we have. Like I said, um, there are certain indicators that are still a concern for us, as it is, for example, the exchange rate risk. Um, then we have our debt plan. You can see there some of the figures. In terms of the debt stock, I would ask you to focus on the last column, which at the end of the year was around $63 billion. Disbursements for this year, we expect to get about 15, 16 billion, both internally and externally. And then you have also the amortization forecast for this year. I'm mindful of time. Um, Again, this is just a continuation of the previous slide. And then these are just the resources that we are going to get in the domestic market. That includes treasury bills, government bonds, and so on and so forth. Um, Externally, again, we plan in our annual debt plan. There is the possibility of us going into the market if conditions are if allow us, of course. And there's also funding from development organizations like the World Bank and so on. Well, I'll just have to skip because of the time. I've already received signal, but I would end up with some of what are our priorities. Again, continue to prioritize concessional financing from development organizations. I just wanted to stress, for example, last year we were able to close a framework agreement with the Korean Exim of 1 billion, which will serve to several infrastructure projects. And that's the kind of solution that we'll be looking at. And then there's other many indicators there, but I would end up here, and then we can later have a conversation around these topics. think that's it from me. Thank you very much.